This is the first time you and I have sat down in a setting like this. We've done a couple of videos. We've talked about the legacy of Xpress, your legacy, your family legacy. I'd actually like to start because I think a lot of people ask me, how did Chattanooga become such a trucking hub? It actually started with your father, Clyde, who was sort of a hellraiser. I sort of described him like Boss Hogg from Dukes of Hazzard. Kind of, was a willing to break the rules. In the old days of trucking, there were a lot of rules. I'd like to talk about kind of what was it like running trucking in the pre-deregulation days, the 1970s, 1960s, when you got your start in the industry?
It was almost like going into the Wild West because you talk about rules that we had back then. It was nothing like what we've got today. You had a lot of flexibility. Drivers could cheat on logs and nobody seemed to care. Some of the regulations were really kind of onerous and nobody really abided by them. And even the ICC themselves basically would deviate from what the rules called for. So if you're a carrier and you're trying, and especially starting up like my dad was, you basically started with 1 or 2 trucks, then you got pretty successful. You might get up to 10 or 15, and then you kind of get on the radar with the ICC. Back then, there was technicalities that you could play. My dad was one of these guys that if he knew that you couldn't do it, he wouldn't do it. But if there's a possibility that you could, then he would do it. So he created what was called a shippers co-op. And, co-ops back in the late 60s and early 70s, where you had to have ICC authority was one way that you could get around having to have ICC authority from one city or maybe one shipper to another city for a certain commodity. It's very limited to what the ICC would let you carry. If you went in to get ICC authority, you'd have Yellow Freight, Consolidated FreightWaves, and all the big LTL companies that really had a lion's share of the market would always be there, with thousands of dollars and many lawyers who actually fight you and trying to get that authority. So people paid a lot of played a lot of technicalities back then. My dad was one of them, and some of the more successful carriers in the market today, they were doing exactly the same thing, and that's where they got their start.
Now, you said something that I actually find surprising. You said that it was more regulations, but nobody adhered by them. That's different than today. I think, as we've covered extensively on FreightWaves, there's a lot of rules right now, and many of them are broken by some of the bad actors. I guess in those days, nuclear lawsuits, lawyers just weren't a major factor in trucking, and so the rules were on the books. But is your contention that because of the insurance companies and because the lawyers have completely changed the way trucking operates?
Well, I think that there's a lot of reasons that we have the issues we have in the industry today. Back then, people didn't sue people like you do today. Today, any little thing that happens, you're going to get sued. There's so many regulations that you can trip over that a lawyer can go in and find something that you've done wrong. And if you've done something wrong, then even if it didn't create a part of the accident, you're guilty. I know at Xpress we spent probably at least $20 million a year on things where a truck really wasn't involved in the accident, but it's cheaper for us to pay a loss than it was to go fight it in court, because the courts were so expensive, the lawyers were so expensive. And that's the environment that we're in today with these nuclear.
And the jury trials, Werner had a massive lawsuit. Wabash had a $400 million lawsuit. I think it got knocked down this week to $130 million. I think we reported that they finally settled it for $130 million. The nuclear lawsuit feels like a new sort of development in the industry. And again, I don't know what you are allowed. It's interesting because not being a public CEO, you're allowed to say a lot of things.
I'd say a lot of things.
But I don't know what the confidential settlements on some of the lawsuits. What, in your memory, what was the largest lawsuit you guys paid out at Xpress?
$100 million.
You paid $100 million. And what happened in that situation?
We had a driver that had driven for us probably for like 8-9 years. He'd been in an accident probably 20 years before, and had fallen asleep. And in this case, it was like 4 o'clock in the morning. A car full of nurses headed to a hospital. They were in the car. Traffic was stopped, and their driver just didn't react soon enough, and it killed 4 of those nurses. You know, our goal at U.S. Xpress is if we're guilty, get in and get the thing settled. In that case, we didn't have a chance. They ended up getting a lawyer that basically accused us of everything in the books, and the judge in South Georgia basically let the lawyer go shopping. You know, and in the past, when you went into court, they usually accused you of something, and they either proved it or not. And if they proved it, you were guilty. If they didn't, then you're off. The courts today are letting people go shopping. You know, was it the driver fell asleep? Was it the truck didn't have brakes that worked properly? You know, and we, in that case, we even had the lawyer on the other side accusing the driver of watching porn, and he's going down the highway. We were able to prove that that wasn't the case because he wasn't using his phone at that point. But that was in the press, and they kept bringing up all kinds of things that, you know, things that really made us look bad. And it's almost like we couldn't get out of that case fast enough. And we ended up having to sue our own insurance company in order to get that thing settled, because it's probably going to get even worse.
Now, I understand, and again, I have to be careful because I have some inside knowledge. Now, I never had like operational knowledge of Xpress when it was public, but I would hear these stories. I believe this actually happened before you guys went public, because you'd have to disclose it if you're public. When you're private, you didn't have to. And what you find in these lawsuits, Dad, is when they get these big lawsuits, the companies will settle them. They want to keep it as quiet as possible, because nobody, except when you're public, you have no choice but disclose it, because nobody really wants to admit that you paid a $100 million lawsuit, because all of a sudden now you've got a big poster.
Right.
Every single tort attorney in the country says $100 million written on the side of that truck.
Usually in a settlement, you always get people to sign that you're not guilty, but you're settling.
So we got you unfiltered today. So because you no longer work at U.S. Xpress, you sold the business. I want to, before we move on from this particular topic, when you guys, as I understand it, you went into a mock jury trial,
Mm-hmm.
and the number wasn't 100 million. It was actually much larger than that when they did. And these mock juries, they bring basically, Matt knows this, they basically conduct a trial.
Mm-hmm.
And it's a way of the defense trying to see how emotional can the counterparty drive the jury to know that if I settle it, because $100 million is a big check.
Mm-hmm.
And as I understand it, you guys are insured to $100 million, and anything above that you eat at that time.
At that time, we had $100 million. We later went up to $300 million.
But the mock jury, I understand, was a much larger number.
Well, it was a larger number, and and it's basically because we were being accused of everything in the books, which none of it was really accurate. We think that the driver fell asleep and didn't react fast enough, and that's what caused the accident. Well, the driver never would admit it, and since he wouldn't admit that, then the guy on the other side was accusing that driver of everything, and actually is accusing us of defective hiring, because the guy had an accident 20 years ago, and that was defective hiring. I mean, we had all kinds of things that we're being accused of, which I'd say none of them were true, but at the same time, the general public doesn't understand. And they were believing everything that this guy was saying. It was in the press in Atlanta, it was in the press in South Georgia, almost on a weekly basis the whole time.
Well, it's 5 nurses. I mean, that's an empathetic. I can imagine they were,
Yes.
young. I have 2 daughters that are 4, and I imagine if I'm a parent, I got these beautiful nurses. It creates a real empathetic situation when their careers are ahead of them. I can imagine how sitting on that jury, how sorry I would feel. And I hear this big bad trucking company failed to do its job. But if we think about that, the nuclear lawsuit thing is really the last 2-decade phenomenon? It didn't
Which
exist.
actually about the last 10 years.
So is it tort reform that you have to do for this? Or?
Well, I think there's a lot of things that have to change. Is that tort reform is probably part of it. There needs to be some limits. I don't know how you put a price on somebody's life, but for many years, the maximum that people could get was like $3 million in a lawsuit for a person's life. And then all of a sudden it went, to hundreds of millions. And in some cases, the truck didn't even have to be involved in the accident. They just had to be close to the accident. And the courts are basically letting, the judges are basically letting the lawyers shop for something that was wrong. And in trucking, there's so many different variables that you're dealing with. There's going to be something that you find that was wrong, but it probably didn't create the accident. But the courts are letting them run with it, and the trucking company is painted as being a bad player, and in a lot of cases they're not. We felt like at US Express, we probably had one of the better safety records in the industry. We brought a lot of new safety technologies to the industry that we were the first to apply to the trucking industry. And I'd give you a whole list of things like disc brakes, collision avoidance, satellite communications that we were actually first, or if not the first, one of the first early adopters. Automated transmissions, a lot of things that would enhance the safety and make the driver's environment a lot better for him to work in.
You guys were always on the bleeding edge of technology.
Yeah, unfortunately, yes. We wanted to be on the leading edge, but we got on the bleeding edge quite a bit.
I remember growing up, you had every house or every room was programmed with motion lights. You were really into the motion light thing and touch screens in the 80s. We had a green screen that used to control the HVAC system that you implemented in the 80s in our house because everything was super
Well, we controlled, I love technology, and did a lot of it in the trucking industry where, like I said, we were first. In some cases, I'd go to Europe and see things that they were doing in cars. Mercedes was our largest lender for US Express. I was over there almost on an annual basis, and it'd always take us through the car plants and go through the R&D plants where we could see all the new technologies that were coming out. And then I'd come back to the United States and try to push the truck manufacturers and putting it on our trucks. In a lot of cases, we got that, especially being Mercedes and them leading the market on new technologies. And they want to be the leader in the United States, especially at Freightliner, with technology. And so I was able to be able to get a lot of technologies that would have been many years coming if we hadn't pushed it at the point that we did.
And at one point you were Mercedes' top 5 customer globally.
Mm-hmm. Well, I know I owed them more money than anybody else.
So you were, as Donald Trump likes to say, you're a partner, not like when things.
Well, I always wondered, in trucking, it's always kind of tough to know what would happen if we ever went broke, and having a company like Mercedes behind you that would probably never really let you go broke was probably a big plus. It's kind of like if you owe a guy a small amount, you've got a problem. If you owe him a lot, he's going to figure out how to work with you to work through it. So
he's a partner. So, but it wasn't always like you guys started US Express in 1985.
Right.
And I remember going down, I was 6 years old, and we would go down to Doug Gap Road in Dalton, Georgia, and it was literally in a trailer with a gravel parking lot. And you had worked for your father, and your father sold a business to a guy out of New York who worked for Roger Penske. Mm-hmm. He was the CFO of Roger Penske's group, and he ended up embezzling a bunch of money and doing basically a Ponzi scheme with Southwest Motor Freight, right? Mm-hmm. And ended up serving prison time. And you and Pat, which was your business partner, and David Parker left. And, a couple months later, which, we won't get too deep into, but a couple months later, David Parker goes out and starts Covenant. You go out and start US Express. But I remember the earliest days, you were a full Kenworth shop. You had these beautiful old KWs, 50 of them, or 48 of them, I think was the number.
Right.
I think 2 of them had accidents or something. So 2 of them were out of commission. You had 50, but 2 couldn't drive. And I remember as a kid just going down there, and it was always fun because we would always go into I was 6 years old, and we would go into the back room, and there was always that's where all the claim stuff went. The Teddy Ruxpins, and the Packard Bells that would be a truck accident or claims, and you always got the stuff. And I remember going down there as a kid, crawling on the trucks and seeing the new trucks roll in. But I also remember at some point you flipped over to Freightliner.
Right.
And then about a decade later, and they had offered you residuals on trucks, they would buy your truck back at a fixed price. And then something happened in the late 90s and they told you to pound sand.
Yeah. The complete part of that story was a guy named Jim Hebe, which is a very brilliant marketing guy, worked at Kenworth. And then, so he really enabled me at US Express to get into the industry. Here I am, I've got trucks, I'm trying to build a business. And, early on, getting financing was a problem. But Jim had been very, very close to people in the industry, especially financing equipment, since he sold it. So he made a bunch of phone calls and actually got financing for me as I was trying to build this business. And that was one thing that I really think helped me get into business, and especially in a big way. And then as he left Kenworth, for some reason, I started buying Freightliners when he went to Freightliner. He left Kenworth on a Friday, and Monday morning he's at Freightliner and says, the deal that we were talking about last week, I think you need to do it with Freightliner instead. He said, over the weekend, these trucks have gotten a whole lot better. So I ended up becoming a big Freightliner user, and bought, in my career, I bought over 80,000 Freightliners, which there's probably only 2 or 3 people in the world that's done that.
So I think Freightliner was 4 or 5% market share. Jim Hebe takes over, it gets to 25, 30% market share. But then Daimler-Benz, I think, almost filed bankruptcy in 2001 or something, right?
I don't remember the timing.
They got into financial trouble, and those residuals were no longer honored.
Well, what happened was that, and I was one of the people that got guaranteed residuals on the trucks that I bought. And back then they didn't do it for hardly anybody, but very big companies like Ryder, they would get residuals. And I had a guy that had worked with Ryder or worked selling trucks to Ryder that worked for me, and he says, we can do this residual deal. And I said, well, how does it work? So we ended up pushing Jim to give us the residuals. Well, Jim started doing it for a lot of other people. And then I think it's 2001, the market, when it turned down, he had a lot of his customers that he had done residuals with, and Freightliners had to take back a lot of trucks. And the Daimler people basically came in and said, you're out, and they started reneging on a lot of the residuals that they had.
They fired Jim Hebe.
They fired Jim.
And said, we're not honoring these residuals.
And said, we're not going to honor the residuals. And at that point, I was looking at about an $80 million loss that I was going to have to take. And we were a public company. We'd gone public 2 different times. This is the first time. And I ended up getting a lawyer, and the lawyer basically says, you got 1 heck of a case. It's funny, most of my deals were done on the backside of a napkin. And seriously, no contract signed, but the deal that they reneged on was the first time I ever signed a contract. So when I went to court, or went to get a lawyer, and we went to court, he basically says, you're going to win this. He says, you got a great case. And the contract basically clearly stated that I did, but the problem is I'm taking on one of the largest corporations in the world, and I'm a small trucker, and the chances of winning were great, but I'd probably have to go through millions of dollars in fighting it, and it'd probably take many years to do it. So my CFO at the time basically made a call to the Daimler CFO and basically said, this is what's getting ready to happen. We can probably compromise somewhere in the middle, because that's probably where we're going to end up. And so we came up with a compromise. So they gave me an avenue where I could eat $80 million over a 4-year period, which I ate, but it adversely affected their stock price during that period, adversely affected their profitability. But, we went through that cycle, and to a certain extent, didn't have to go through that lawsuit, which would have been pretty messy anyway.
And you guys, if I'm not mistaken, were negotiating a big debt facility at the same time.
Right.
And so settling it was very important so that you could assure the new buyers of your debt that this risk wasn't hanging out there. So timing worked against you in some ways.
It did.
But you found a path. There was a freight recession. You've seen multiple freight recessions in your
I've
life.
seen too many.
It has been said, I've been told this, and certainly I think Shelley Simpson said it publicly, that this is the worst downturn. This downturn that we're in right now is the worst downturn that any executive's seen that has been around this industry for decades.
This downturn has been much longer. Most of them run a maximum of about 18 months. The average was probably more like 9 months. They occurred almost every 4 years. If you go back to 91 and before, the recessions were very harsh. And you kind of took those on the nose. Since I guess Reagan kind of changed how the world worked with his tax credits and stuff, the market really changed a lot. So you didn't have the deep recessions that you had. We had one in 2001. We had one in 2008 that probably was one of the worst ones we had since 1991.
91 was the Gulf. I mean, it was past Reagan. Reagan was the 80s.
Right.
But it was the Gulf War. The oil prices went to $100 a barrel or something.
Yeah.
And that just squeezed the U.S. economy so tightly, and that caused a pretty significant freight recession. 2001 was sort of the dot-com bubble, sort of post-Y2K slowdown. Was that very painful or not really?
It was painful to a certain extent. Anything in trucking gets painful when freight slows down. And, in trucking, the goal that you have is you want consistency, you want profitability, you want to be able to have strong cash flows. And going through a recession, you do what I call damage control. And all the rules that you play by almost goes out the window as long as you can figure out how to survive that cycle.
Got to become a cockroach of some sort, right?
So if that's what you have to do. I mean, you do what you have to do. The number one thing in business is to stay in business.
Yeah. So 2007, 2008 hits. Freight market is the whole economy feels like it's going to crater. In many ways, it did. What was that recession like?
Well, 2007, I'm one of the brain surgeons that decided to take the company private in 2007. And 30 days after we announced the going private deal, then Bear Stearns and Lehman basically goes down. I think we announced in July and August it went down. And then that cycle was very painful for us because we were newly highly levered company.
You had bought it. It was public. You had taken it private to buy it back as
right.
At this point, you and Pat, your business partner, basically become a part of the family office.
Right.
But use debt to finance it.
Well, trucking is always, you've got a lot of debt with trucking because it's highly asset intensive. So
you borrow money to take the company private, take it private, and then the world ends or the financial markets collapse.
Borrowed almost $1 million to, $1 billion to take the company private. And during the process, because Lehman and Bear Stearns basically went down, the banks wouldn't even loan other banks money because they were scared. Nobody knew what was going on. They felt like the whole financial system was imploding. And of course, we were trying to do the going private deal right on top of it. So we would have been one of the least leveraged buyout companies in the business. But by the time we got the deal done, and because of the Lehman and Bear Stearns deal, they took $90 million of extra interest, what they call OID, original interest discount, that we had to give to the banks to get them to join the syndicate to fund the deal. And so that $90 million basically came out of our pocket and basically put us into a highly leveraged situation. So we had to figure that one out, and especially figure out going into a downturn because we got private in October, and by the time we got to December, January of 2008, it was very apparent that the market was going down pretty hard. And so we had to immediately go into what I call super damage control because we had the high leverage and we also had a market that was deteriorating on us.
In those days, 2008, everyone in the market sees freight dry up because the economy is collapsing, right?
Mm-hmm.
The worst downturn in the economy since the Great Depression. People are panicked. Banks are stopped lending money, no liquidity. Other truckers, because in this market, you got to respond, right?
Mm-hmm.
Other truckers, and I believe it was Schneider, ends up offering 80 cents a mile anywhere you want to go to across the country because they decided they had to keep the truck running and simply paying the driver and the fuel was enough just to survive because they were also, not only was US Xpress in survival mode with a lot of debt and leverage that did you personally guarantee it at this point?
No,
Or is it through the corporate?
in the first probably 18 years, I personally guaranteed. But then after that, we got big enough, and especially having Daimler behind us, we didn't have to personally guarantee. Thank goodness.
But you still have a $1 billion business
Yes.
at risk. So Schneider and some of the other major carriers, they would call them mega in this audience, end up dropping their rates to basically just keep the trucks running.
Well, at that point, the average rate's about $1.10, $1.15 per mile, and Schneider came out with this deal, 80 cents a mile anywhere, and it really kind of drove rates down almost overnight, very hard, and really made it tough on almost anybody in the industry at that point because either you had to match what Schneider was doing or you didn't get the freight. And so it really created a major disruption in what we call the network. And trucking, you basically want to build a network where you got the efficiency of inbound, outbound freight to keep your trucks moving pretty well around the clock. And that disruption really disrupted a lot of things, not just for US Xpress, but for a lot of other trucking companies. And it actually put some trucking companies out of business because they didn't have the wherewithal to be able.
It's all about the balance sheet. To be able to fund it and working capital.
Well, I'm a big cash flow guy. You talk about profits, that's good, but when you build a company and you're building it very fast and you've got to fund, especially in our early years where we're growing 40, 50, 60% per year, you got to figure out how to fund a company at that pace, and cash flow became extremely important. I still think it's very important. Even the companies I'm involved today, I still watch the cash flow very close because if you want to grow or if you want to go into a down cycle, you got to have that dry powder for the down cycle. Or if you want to grow very fast, you got to have the money to be able to leverage up to be able to go through that next cycle.
You taught me something early. Gosh, I was probably 10 years old. US Press started in 1985. You got to what, 40, 50 million maybe by 1990, maybe 100 million. I don't remember what the number was. But there was a moment in there, I think in 89, and I was old enough to understand, but didn't get it. And you almost filed bankruptcy because you guys were growing too fast. And I remember I was young enough to not understand it, but you made the statement to me that cash is king, and you can have a fast-growing, profitable company that can still go out of business.
We, in 88, we actually had an 88 operating ratio.
And some of the people in the room may not know what an 88 OR is.
Okay. The OR is basically your profits, not including interest on your debt and taxes. So it's how efficient that you're operating your company or how profitable. It's something that the ICC used to use as a gauge to gauge how companies compared to other companies. But we had an 88 operating ratio, which is pretty good. And then in 89, we're still growing at 70, 80% per year and still highly profitable, but it's running out of money. And the question is, do I file bankruptcy or do get creative in how to make this work? And of course, obviously, with the relationship we had with the Mercedes Finance, we're able to go through that cycle. And there's a little bit more to that story. My dad also owned a company called Countrywide that he had sold to one of the railroads, and they had gone through 2 or 3 years of really struggling, and they were having problems meeting their bank covenants. So I kind of knew when their bank covenant was going to hit, and they would call and say, you know, can you work with us? And of course, I was buying trucks, and I was buying them at probably something like 50 cents on the dollar
From Countrywide.
from Countrywide, and I got drivers with it too. So I was growing even faster, but that's one thing that helped me go through that cycle. And it's pretty interesting. We've done Qualcomm satellite communications in '87, one of the first carriers to do it. And since we had satellite communications, we were able to go tell customers where their freight was at, where most of the people in the industry couldn't. So their company was on fire, and we were making headway very fast, but almost outran our ability to fund the company.
It seems such a perverse thing for people when you describe companies profitable, growing at breakneck speed, and yet you're considering the thought of bankruptcy is possible by running out of cash.
You just can't keep up with it.
What is it that you do in those moments where you're like, okay, I see, I'm staring at the abyss. Things are not good. I remember I was playing soccer, then we went to Conyers, Georgia, and this is the one of the first memories I ever had. We went to that what was it, Whitewater down in Atlanta, and I remember it was a $40 admission, and probably it's $10 in those days, but it was a big enough, and you were just really pissed off how much money we had to pay to the water park. And I can get it, but you were under an enormous amount of stress thinking about your company and having to do this, what was you probably viewed as frivolous. But what do you do in those moments? What have you done in those moments where you sort of stared at the abyss?
Well, when you're running a company, especially, you're being very aggressive in how you're running it. It's like running a marathon. You're not going to do a sprint. You know that you're going to have to run a long distance, and most of the decisions you make, you have to think of those long distance things. But occasionally, you have to do that sprint, and we were doing the sprint pretty heavy in '89, just because and I'd get money in. I knew how much money I'd get that day. Then knew how many vendors I could pay. And that was pretty well the case for almost a year during that process. A couple of years later, I'd made enough money and slowed down the growth, which threw off extra cash because it did slow down the growth, so I could go in and buy the company that my dad had sold like 4 or 5 years earlier.
That's Southwest Motor Freight, right?
A company called Southwest Motor Freight, which is based here in Chattanooga, which gave us the ability to double the company. So I thought, okay, this is a great deal. And of course, Southwest had gone through bankruptcy with its previous owner, and my dad had gone in.
The guy that embezzled all the money.
The guy embezzled the money. My dad went in to the bankruptcy court and convinced him to sell the company to him for $1 if he would assume the debt and if he would keep the employees. Well, 3 to 4 years after that, he was struggling because he's trying to run a company like he did when he owned it before. And a lot of things, the market had changed, the people that was in the company had changed, and it didn't work. He'd come down to US Xpress and he'd say, how many mechanics per truck do you have? And how many dispatchers do you have? And I had a brand new fleet. And he had an old fleet. He had a cab over fleet, and I had a conventional fleet. So I didn't have problems getting drivers. He did. So he had all kinds of issues. And when I bought the company, guess who had the issues? I did. But I also had another issue. My lenders, even including Daimler, backed up and said, ooh, you bought a company bigger than you, and it wasn't profitable, and we're not sure you're making the right decision here. So for about a year or so, I had to struggle through that one too.
You're a glutton for punishment, I guess.
Well, I always like a challenge, I guess. But 9 months in, I'm sitting there and thinking, I hadn't made it US Xpress. I could have been working three or 4 days a week and not having to put the hours and stuff in. And with Southwest, running Southwest and US Xpress, I was basically working 7 days a week and just really almost burning out. And I remember at that 9-month point, I decided, okay, things are going to change. And we basically had, I had management meetings on a weekly basis. Management would come in, we'd talk about what needed to happen. I used a lot of the principles I did at US Xpress. It didn't work at Southwest. And what happened was the people would come in, they'd agree, yeah, we're going to do this. Next week come in, yeah, we're going to do this, but nothing ever happened. So we have what I call a lot of Black Fridays. And I would assign managers with responsibility. This is your job to get this done over the next X period. And if you didn't, you don't have a job anymore. Well, guess what? Over about a 6-month period, I went through every manager in that company except for one. And she basically had gotten the job after I bought the company, and I put her in a position over payroll. And she's the only survivor after 6 months.
And it was just largely because the company was broken and trying to fix that company with the same management team.
I had to change the culture. I had to change the mentality. I had to change the way they thought about things. And at Xpress, we're always very aggressive in how we looked at things. We also gave our employees back then, the federal tax rate on companies was almost 70%. So we basically said we'll give the employees 20% of the profits because government was paying a big chunk of it. And so we had very highly motivated people. And when we went into Southwest, those people weren't nearly as motivated. And we really had to come up with what I call a game changer. And the game changer was we had to change management. We also had to change the culture of the company. And we had to create a real focus. And during that 6-month period, I was able to pay my dad I agreed to pay him what he put into the company over the previous 3 to 4 years, and I paid him with what I made in the profits I made in the company. So there again, it worked. The other thing is he had all cab over tractors, and this is before 53-foot trailers were allowed. And he and my stepbrother at Covenant, David Parker, were going very heavy into cab over tractors because everybody knew that 53-foot trailers were getting ready to get it passed, and you couldn't, at least based on the old law, you couldn't haul a 53-foot trailer with a conventional tractor. Well, but when the law passed, and I was all conventionals, I ended up going out to a company called TIP, which rented trailers, and they had some 53s, and I put them behind my conventional tractors and ran them across country. And what we found was that the law, when it was written, was totally different than the previous law. Previous law was looking at the overall length of the tractor and trailer, and the new law basically only regulated the length of the trailer, didn't regulate the length of the tractor and trailer. So we were one of the first in the industry to run conventional tractors, and I kept having people tell me, "You can't do that. You can't do that." But I was doing it.
We have a lot of brokers in the room.
Yeah, large nose tractors.
It's the long nose, right?
Yeah.
So
and drivers really preferred that, and in my opinion, they were safer, so I wanted to stay.
I mean, cab overs are cool. I still want to find an old Southwest Motor Freight with the red stripe, and I'd love to have.
I saw some up in the logging industry in Canada or
they're running
British
hard.
Columbia. This has probably been 10 years ago.
It's funny. Every now and then I'll see an old Southwest Motor Freight trailer that still survived out there. One of the things that I think taught you the importance of cash, because at this point with Southwest Motor Freight, you guys are what, 300, 400 million, something like that? Mm-hmm. You're about to go public, but there was something that that actually happened when you worked for your dad. Your dad had some we'll say habits, and he liked to take the cash and go to Vegas. Tell us a little bit about how you learned to manage cash flow by working for your father.
Yeah, my dad was kind of simple-minded, but he's brilliant. And growing a company, he was always short cash. He basically would write the check for every bill that came in the day it came in, but he wouldn't mail it. He'd put it in the drawer. And he waited for people to call. And he had this bad gambling habit, and he'd go to Vegas 2 or 3 times a year, and, we'd always have to wire money to him when he's out there. But he let me control all the checks in the drawer. And I mean, there's a stack of checks about this big in that drawer. And I kept getting the calls from these people, and I got tired of people calling with $50 or $100 and, mom and pops that really needed the money. And so I decided I was going to do it different the way he did it. And so I went in and took everything below a certain amount and put it in the mail. Well, then Stack went from that down to that, and when he got back, he panicked. What in the world did you do? And basically what I'd done, and since I was in college at that point, really learning how things work, I also knew the bookkeeper at the local bank that we used. So I'd call her every morning and see what the bank balance was. So I knew how much money I could float. So I was floating, back then, take 4 to 5 days for a check to go from our post office to their bank. And so I was playing the float. Well, he didn't understand what I was doing, so he raised hell. And for about 3 or 4 weeks, I mean, I caught it every day. You didn't know what you're doing. You're getting us in trouble. And I said, no, I'm not. Well, he also took a trip to Vegas. Being a son, I got by with things that most people couldn't. Since I was in school taking an accounting course, the bookkeeper, and there's only 3 of us in the office, and I was one of the 3. And she basically was teaching me how to do bookkeeping because I wanted to learn accounting. Well, I was reconciling a checkbook one day, and I knew that he was getting ready to go to Vegas. So I decided I was going to make, and I told the bookkeeper what I did. I'm going to make a $50,000 change in the checkbook balance where he won't see how much money is there, so maybe he won't run off to Vegas and blow the money. So, and he'd come back and we'd have to rebuild the checkbook. But in this case, it went on for about 6 months. He had lunch with the banker. The banker was bragging about how good he was doing. You keeping a good balance. And the other thing that he did, he would pay off equipment in 36 months, 100%. Well, trucks had a big value at the end of 36 months, almost a 50% plus value, more than actually, once you paid the debt off, you paid it down to 0, but that truck still had a 50% value. So I'd have to pick up, when he went to Vegas, pick up a bunch of titles on paid off trucks and go down to the bank and borrow money so I could wire it to him in Vegas. Well, since the banker basically was bragging about how good he was doing and I hadn't had to go do that, then my dad came back and he had this old calculator I called a Remington 99, and it'd go clunker, clunker, clunker for about 5 minutes if you put 2 or 3 numbers in for it to go through. And he was in there for about an hour, and the bookkeeper came in and said, he's figured out something's wrong. You better go and tell him what you did.
So he finds out he's got a lot more. Go ahead.
So I go in, I tell him what I did. And of course, he's one of these people that's pretty hot-tempered, so things went flying around the room right past my head. Lucky I probably didn't get knocked over, but he was really, really mad. Don't ever do this again. You don't know what you're doing. Well, I didn't know what I was doing.
But he found out he had a lot more money.
He found out he had a lot more money. And 2 days later, it's in Vegas again.
So, Dad, we only have about a minute left. And there's so much to talk about here. I do appreciate you coming. You've done a lot. You've seen a lot of cycles. You've built businesses that are high growth. And unfortunately, we don't have an opportunity to talk about sort of how things ended up today, just out of time. Is there a lesson in all of this that you feel like through your 50-year career that you should share with anyone in the room?
I think the biggest lesson that I probably learned, and some of the things that we discussed here, it all goes back to cash flow. Now, about 15 different companies over the years, only one basically went sour, and I'm the only guy that took a loss in it. But the cash flow and understanding how the cash goes out, understanding how it comes in, how you finance your business is probably the most important thing. If you've got good cash flow management, you can grow relatively fast. You can go through some of these downturns and some of these cycles that you don't have the pain that a lot of other people have. And at US Xpress, we went under my management. We went 36 years and only had 1 year where we had a loss, and that was in 2008. And so that's a long-term deal. But we had a lot of crises, and a lot of crises were fixed by being able to manage the cash flow and and having good credibility with my lenders.
Well, unfortunately, we're out of time. Hopefully we'll do this again soon, Tom.
Well, I can tell you, I've been very blessed in this industry. I've enjoyed this industry, and boy, it's the toughest industry out there, though.
Yeah. Well, thank you so much, Dad. Appreciate it.
Thank you.